Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big markets that we trade, and we formulate an attack plan for tomorrow's trading. Welcome back from the holiday. Hopefully everyone is able to rest up a little bit, get some time in, get some rest in, depending on when you needed more. And now we're ready to rock and roll. So overall, pretty interesting market sentiment that we have yesterday being very, very slow. Kind of an obvious, I don't think that really surprised anyone to see yesterday being very slow, and now today we're coming in, getting a little bit more of that volatility coming in. Definitely a welcome sight. Now, before we jump into the markets, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter, and that's going to be the place where you sign up your email address, and we can send you an email every single time one of these videos comes out. We also talk about all kinds of different stuff between cryptocurrencies, stocks, you name it, it's going to be in there. So a great newsletter to get your hands on. At the bottom of the page in the blog section, also make sure to check that a couple times a day. We have not only the live trading morning prep levels that are posted every morning to give you all of the major levels of support and resistance, but we also do a daily video where it's either a trade example or a market psychology video going over what we saw that day. If you haven't done so already, make sure to click on the live trading subscription and trial info. You can sign up for a one-day trial, sit down with us in the room, and you can see what we do every day. You get a visual on how we handle things, whether the market's fast or slow. You get to see it all. So make sure to sign up for the one-day trial. If you really enjoy it, you can always sign up for a weekly or monthly subscription. And of course, if you join as a full-fledged VIP member, the live trading subscription comes along with that package. Now, taking a look at the euro here, the euro for the most part had some pretty good bullishness. The morning session was very slow when we first opened up. Not really a whole lot going on in the afternoon session. In the overnight, going into early morning, we finally started to get a little bit of a bump in bullishness, and then it was just off to the races at around 5:30, 6 o'clock. With that continuation to the upside, that did create a little bit of a spike and a wedge. We had a spike up here, and then we started wedging out, and we are now just coming down to test the low of that wedge once again. The high of the wedge, relatively unconfirmed at this point in time, just because we've created a lot of other swing highs. So really, this zone up here is an area that's going to be of a little bit of trouble. The big thing that we really need to see from the buyers, not only the support that we're getting off of this rising wedge bottom, it looks really good, but they're going to have to break through 12,571 and stay above it, right? Get some conviction above that instead of like we saw back here. We need to see them break above it and then continue higher. And unless if they're able to break through it at 571, we should be able to rip higher and break a new high. If they are unable to do that, though, that is a big red flag if we start getting stuck there, and we could be in store for a much larger pullback than what we're seeing right now. So the buyers have it for the time being, but they're going to need to put up their defenses to hold that market higher. On gold, relatively interesting scenario that we have here on gold. We don't get this very often, where we have an expanding megaphone to the bull side, right, with a direction. Most of the time, megaphones are just kind of sideways, winding out a little bit. But in this case, well, we're bullish, right? We don't need to be doing anything other than buying, but we are getting a little bit of a pullback here. And a lot of times when you get these types of pullbacks, you anticipate them being slightly more corrective phase, like ABCD pattern, very measured and equidistant from one another. So you have that first leg down, the secondary leg down comes down right around that monthly support level at 69.6. And we also have major support at 70.2 and 69.4. So this whole area inside here, just a huge zone, a cluster of support. With daily support, monthly support, weekly support. Tomorrow is the new month in these levels. Well, they're going to be very aggressively held going into tomorrow. So it's something that we're fighting over a little bit here. And especially one notable area, last month's high, right? Last month's high at 72.4. Currently, the market is trying to come back inside of it on the final day of the month. And they're trying to basically create a scenario where the monthly candle isn't as strong as maybe they were hoping for. So very interesting area here on gold, to say the least. Really what we're looking for here is a little bit of a deeper pullback. I want to buy, but I want to buy at a better price. We have a very strong aggressive top being put in, almost too aggressive, and this correction makes a lot of sense. The buyers who've been buying this thing up like crazy the whole way, they're going to be taking profit. The anticipation is that they come down into that major area of support below us, between the monthly, weekly, daily, I mean, you name it, the level of support's inside there, for a bouncing area to buy back up towards the highs. So just looking for a little bit more on the pullback here so we can get some upside juice and get that high taken out. Over on crude oil, nice bearishness with a huge cluster of support and resistance inside here, not really managing to get a whole lot done before collapsing lower. Now, this drive lower did come with a little bit of a spark there just after 5 o'clock, right before 5:30 or so. Big drop lower, and ever since then, they just haven't looked back. We did get a halfway decent corrective phase here, but they didn't quite get up to the major areas of resistance. Big area of resistance, 48.70, with support below us at 47.92. So we're kind of stuck inside of these major levels of support and resistance from the 60-minute chart. Now, one thing that we do have kind of working against the sellers is this rising area of support. They keep pinging off of this level, and until that breaks, they're going to have a really hard time getting it to go further down. This could be an indication that sellers are looking for a better price. Now, another level to kind of keep our eyes on, 48.51 is the high point of that huge rally higher, and that could be the top if they retest it. There are going to be a lot of buyers who are aggressive inside here, buying for every reason they could get their hands on, and that being the highest close on the return of that area, that may be their excuse to exit all of their long positions. So 48.51 is another big level of interest for the sell side. 48.70 above that, 48.92 above that, and then obviously that massive cluster of resistance up there between 49.14 up to 32. But more likely 48.51 and 70 are going to be the ones that we're going to get to play with. The other ones might be a little too far detached. For the sellers on the downside, if we can break below this rising support, we're going to have to break through another level. Weekly support is in the way. If we can get through that, then we have another level that we're going to have to deal with at 47.92. So there's a lot of stuff in the way of both ends. Sellers have the primary initiative, but it wouldn't be a surprise to see this transition into a range going into tomorrow. And then the S&P, speaking of range, here's the S&P. We haven't really gone anywhere today. For the most part, we opened up here. We're going to be closing here on this most recent bullish rally, and the daily candle is just going to be an absolute mess. Mostly a bullish candle, right, with most of the wick on the bottom showing rejection of the lows. Not a whole lot of wick on the highs, but still a good amount of wick. Probably 10% of the day is going to be seen as the wick on the daily candle, and that's going to show a little bit of indecision. Now, if we zoom out a little bit, we do have a bullish bias, and this could be that trap low that a lot of the buyers on the bigger picture, the investors, what they were looking for on this dip down here. And it sure looks like that's what they were waiting for on that end of day rally to the upside. Overall, the buyers definitely have the initiative to the highs, and they're just looking for more continuation. With this pushback up, the final line of defense for the sellers is going to be at 24.1375. They need to break through this. The buyers need to break through this if they're going to get continuation to the high of day. If we can't break through this, we may be gearing up for a quick little pullback down to 24.09 quarter before, and then get the rally to the upside for that breakout higher. Overall, though, this is the last line of defense the sellers have, and if we can break above it, the high of day is pretty much good and done, right? And right around the corner. So just need a little bit more emphasis from the buyers here to continue that rally up, break that level of resistance at 13.75, and then we should be nearing the high of day shortly thereafter. So that's going to do it for the outlook. Now, taking a look at the news for tomorrow, we do have a decent amount of news. Yeah, finally, right? Thank you, right? We've got some news to keep the markets going, and hopefully it won't be so slow. Now, tomorrow morning at 3:55, out of the Germany side of things, we have the German manufacturing PMI forecasted at 59.4. That was also the previous. At 4:30, out of the UK, manufacturing PMI forecast 56.5, previous 57.3. Then we start getting into the U.S. announcements at 8:15. ADP non-farm employment change forecasted at 185,000, previous 177,000. We also have the ISM manufacturing PMI tomorrow at 10 o'clock. 54.5 is the forecast, 54.8 is the previous. And because Monday being a holiday, that did push crude oil inventories off a day, so we also have inventories for crude tomorrow at 11 o'clock, and that's going to be a forecast of negative 2.517 million, previous negative 4.432 million. So plenty of stuff to keep the markets going. It's just a matter of, well, do they, right? We've been seeing a lot of days here and there where we'll get a bunch of news, but then the market just doesn't really do anything. So fingers crossed for some movement tomorrow, and we have the news to back it, but it's just a matter of if the participants want to come back from holiday tomorrow or if they want to wait for a whole week. So we'll have to see. Like we always say, though, as always, make a plan, trade the plan, follow the rules, and you'll be A-okay. Until next time, we'll see y'all then.